Hello, everybody. Welcome back for another video. Hope you're all doing great. Hope you're all doing well. Hope everyone out there is doing absolutely fantastic. And that you're all having a great day. Hope you're all remembering to invest. Really, hope you're all remembering to save your money, to make a savings account, to prepare for the future, to have a nest egg, to make sure that you are hopefully purchasing the correct cryptocurrencies, especially if we are expecting to see prices do a 15, 20, or 30x really over the next couple of years. Without any further ado, let's jump right into it. Pretty interesting news today. There's a lot of, I told you, we're entering into some new kind of a phase within this market, within finance. A lot of it is taking place between larger companies. It'll make a little bit more sense in a bit. A lot of it is quite silly. The issue actually is that there's so much money to be made in this market, and there's so large estimates of where the market is going to be over the next 10 years. Everyone's just really trying to accumulate as much of it as possible. Everyone's trying to corner their own section of a market. Some of these things will work and others. That's $17 million worth of Bitcoin. It drives me crazy when people send transactions like that. It's completely insane. Anyway, yeah. So first up, this will come as absolutely no surprise. These companies are still purchasing very large amounts of cryptocurrencies. We have heard personally from a grand few companies who have exhibited interest in purchasing anywhere from 5 to 7% of all Ether. In very simple mathematical terms, if 5 companies end up doing this, they are going to purchase all remaining Ether that's actually left, like up for grabs. It is going to go to them, and this is basically what they want. The company called BitMine Immersion Technologies and another one called Bit Digital are both advancing their Ethereum strategies, though in very different ways. BitMine being the company who is probably going to get to their goal first and then announce that they want to get even more, because we're not idiots here. A lot of these companies went in on the news this summer and they were like, yeah, we just want 5 to 7% of all the Ether. We don't think that's that much. And it was like, BitMine has taken a big step, understatement, in building their Ethereum reserves. Last we heard, they had 1 million Ether, then they had 1.5 million, then they had 1.7, then they had 1.8, then they had 2.1, then they had 2.4. BitMine is currently holding 2,650,000 Ether, 2.65 million ETH. They got that since, let's see, July, August, September, October. 4, 8. It took them about 15 to 16 weeks to get that. Meanwhile, Bit Digital is preparing to raise fresh capital. It has announced plans to generate $100 million through a convertible note offering. I think that's the thing that that MicroStrategy was doing before, where you basically put debt against yourself as a company and say, give us the money now and we will pay you back over the course of a period of time. Many of these thus far, at least from MicroStrategy, announced that they would be paying these other companies back in 2028 or 2029. And sometimes it had like 0% interest, which I find even more interesting. There is a possibility it could extend that amount by another $15 million if needed. The money raised is expected to be used to buy more Ethereum and support general business needs. This could include making investments, acquiring other companies, or funding other crypto-related projects. Digital currently holds over 120,000 Ether. And I mean, comparatively, that sounds a lot tinier than, 2.65 million Ether. A lot of the companies, if you missed it as well, in a weird twist of events, were old Bitcoin companies. So you understand BitMine and Bit Digital. They were, for some reason, a lot of companies in the summertime turned their back on Bitcoin and announced that they would only be focusing exclusively on Ethereum. Cool. I assume this will continue happening. My guesstimates still stand by sometime next year. That is to say, if prices do reach these astronomical numbers that the analysts have been telling us they're going to go to since around January, this will create more of a frenzy for buying. It happens within retail, but it will also happen within these companies. If we start ripping and roaring towards an $11, $12, $13, $15,000 Ether, these companies will, I don't want to use the word forced, but if you have a quota, a number that you want to get to, they're going to start purchasing huge amounts at the exact same time, trying to get, if you want 5 to 7% of all the Ether that's out there, and prices begin to double, you're going to have to spend twice as much. So the buying will accelerate. But the problem is that when they buy more, the prices also go up higher. So it creates a self-fulfilling price prophecy. Cool. Why not? Let's hope normal people figure this out. I know they won't. It's just a huge amount of wishful thinking. But yeah, these companies are going to hold all the crypto in a couple of years, and then a lot of people are going to be questioning why, forgetting that they had about 20 years to do so themselves. That's the BitMine, now has 2.65 million ETH, and Bit Digital has over 120,000 Ether. I assume that'll be over 1 million relatively soon as well, just going logically off of the numbers. Okie dokie. Let's move on. Stablecoins have been a major discussion, and this one is no different. Years ago, MoneyGram and Western Union announced that they did not like crypto and cryptocurrencies were terrible. And then we had news reports that one of the companies had partnered with Ripple and the other one had partnered with Stellar Lumens. But this is like 2019. Like, it was a really long time ago. And basically since then, we had kind of heard nothing. The rumors back then were at least that we would see these companies using the actual coins themselves, like they would be using XRP or they would be using Lumens to move the money around. But I think the idea of losing any kind of value as the transfer is happening, who knows, blah, blah, blah. So now the discussion has turned back to stable coins. This isn't a joke. This isn't me, celebrating or patting myself on the back. It's just actual numbers. Companies like MoneyGram and Western Union are only hanging on because of their ability to let older people think that there's no other option. If you've ever walked by a MoneyGram or a Western Union, if you look inside, it tends to be like usually older people or people who are older trying to send money to their family members in other parts of the world that aren't as connected to the current financial monetary system. The issue is that young people know that you can send money through PayPal. You can send it through, what's that other thing that everyone's using? The Cash App and all these other yada yada yadas. So there are thousands of like we're no longer having to stand in line to send money to someone, and even more so with crypto, it's actually not a thing. So the same way that we saw PayPal enter the crypto space about 2 or 3 years ago, announcing that you can now buy your Bitcoin here. Look at that. You can now buy your Ether here. These are desperate attempts to try and get people to remember that they exist, or that you use our system. Use this one as opposed to being able to send crypto yourself, like that kind of thing. PayPal also recently announced something. They're trying to get more people to use their PayPal stablecoin. No one's using these things. No one wants to use these things. So here is MoneyGram realizing that they are an ancient company. MoneyGram is launching its own entry into the digital custody space with an app designed to hold both traditional fiat currencies and stablecoins. A trial run is scheduled in Colombia before MoneyGram expands to other markets. It's a carefully planned decision, as most remittances in Colombia come from abroad, usually in US dollars. They will apparently be using blockchain. I think MoneyGram, this makes sense. I think they were partnering with Stellar Lumens. The problem also is that many companies in the space don't like Stellar Lumens. There's a lot of history for a lot of chains and a lot of coins and a lot of usage of things and lack of usage. It's kind of one of those things, like, if you know, like, you literally had to have been here for multiple years. They will be using, it says the underlying blockchain is powered by Stellar and Crossmint, with customer balances held in Circle's USDC. Circle is from Coinbase. Coinbase has kind of bogarted themselves into a number of different markets. There was also something recently about a European something, and they're also going to be using Circle's stable coin as well. It's mainly Coinbase and Tether. These are the two largest stablecoin issuers out there, and Coinbase is always like dramatically desperate to get people to use their products, but it usually ends up working. So it is left to be seen if we are going to see Coinbase and Circle have the largest stablecoin on the planet. But it says, while MoneyGram's new wallet appears to be a good way to bring existing MoneyGram customers into stablecoin, support for other currencies, cryptocurrencies, is still limited. Cool. Yeah, that's the story. It's something that could have been launched about 4 years ago, and I mean not even with the crypto, just like an actual app. These companies are so like old that it's just kind of it's a bit embarrassing sometimes. Most of you must have. You must have watched the TV show Succession. If you're into money, you've watched the TV show Succession without spoiling it by any means, shape, or form. It's like literally in the first 12 minutes of the first episode. The TV show Succession is basically about this media empire. And it's this guy who runs it, and he's quite aged. And he has 4 kids, but 3 of them who really can see a future for the actual company. And they tell him hey, maybe we should make a website. He's like, balderdash, we don't need a website. Hey, maybe we should buy up some other media companies so that we have a new, fresh look. We don't need any other companies. We still print newspapers. Like that kind of thing. A lot of these companies are so stuck in the ways that they do things. They're probably never going to change. But also, when was the last time you told your friend, actually, I want to go buy a PS5, and can we stop by MoneyGram? I really got to send some, it's just not a thing anymore. So they're trying to adhere to or show favor to or the cryptocurrency space, but it's just a little bit awkward at this point because no one's going to be using their services. Cool. MoneyGram is, I think, is it their own chain? Are they doing another chain? It says the underlying blockchain is powered by Stellar and Crossmint. That would imply that there's a blockchain being created by MoneyGram that is powered by the technology of Stellar and Crossmint. And even then, they're not using Stellar Lumens. They're using Circle's stablecoin. So I don't really know what the fudge is going on, but cool. No one's going to be using this anyway. So, okie dokie. Let's move on. Also well, yeah, I could have gotten that one. So, you know how when you go to a bank and they offer you, and I'm seeing it a lot more, and it's actually it's not even cringy. It's like you guys aren't even trying. I'm seeing a lot of like advertisements on bus stops and train stations for like bank accounts, and like they have like a happy family smiling and hugging, and it's like, don't you want the best for your family? Like that kind of really weird thing where it basically is telling you like, hey, you can open up a new bank account and we'll give you 1.75% interest on your account, as like an asterisk next to it, and you're like, what's that for? I read the bottom. I always read the fine print, and it says like that 1.75% is for the first year of you having that account. And then your interest rate goes down to 0.4%, like here and after. And the issue is that inflation is about 15%. And I know some, no, inflation's 2 to 3%. No, inflation's quite high. Wages aren't keeping up with it. Petrol's not keeping up with it. Rent is not keeping up with it. And neither are the bank accounts. So a lot of stable coin issuers, you might have noticed that this is, once again, stable coins. Stablecoin issuers have been announcing, we give you a yearly return. If you hold your money in Tether on this website, we will give you 5% yield. If you hold this coin on this website, we will give you 4.4%. Like, perpetually, indefinitely, it will kind of continue in that manner and direction for as long as you are holding those coins. Banks can't keep up with that because they're used to offering these like meager numbers. They're used to us like literally being under their heel and us going, where else can we go? What else can we do? Remember how I keep on mentioning that we keep on hearing news about Bitcoin and XRP staking and stuff like that. If you tell normal people that you can literally just buy this and you will get a return that's higher than what you have in the bank, they will stop using bank accounts. Can you imagine who has a problem with people no longer wanting to use bank accounts? It's banks. U.S. banks are intensifying efforts to ensure that stablecoin issuers cannot earn yield, warning lawmakers that allowing rewards would drain deposits and destabilize lending. Did you hear that? Did everyone understand the words that I said in English? I hope you did. The idea, and look at how fragile. First of all, stablecoins are a corner of this market. They're not Bitcoin. They're not Ether. They're not like the main popular coins out there. Imagine how fragile the system has to be if you can destabilize a system that's been around for essentially hundreds of years with something that was created in 2017, stablecoins. The idea of a stablecoin issuer being able to give someone who's holding their coins 3, 4, 5, 6, 7% as a thank you for holding that stablecoin in this account seems quite common. The fact that banks don't want to do that, for those of you who don't know how this works, and it kind of shocks a lot of people. When you deposit money into your bank account, do you know what happens to it? Well, banks use your money. They don't tell you that they're using it, but it says it in the contract when you first open your bank account or afterwards. They use your money and they put it into foreign markets, or they use it to like get other money and to do other things and to put it into other investments. The money that this is true. The money that these banks make from your money equates to several 100% more than they initially put in. They know which markets, which things to put it into. And I mean, sometimes even algorithmically, they'll simply make 1 to 2% trades. So if you do a 1% trade on $1 million, you made $10,000. These banks are dealing with billions of dollars sloshing into markets back and forth. They're making gigantic sums of money. The other issue then it ends up being the money that you have in your bank account. They go, okay, here you go. And they hand you 1 cent. They hand you 1 penny and they go, well, what more do you want? Banks could be offering a good 10, 15, 20%, but in order to maximize their profits, they give you as little as humanly possible. So stable coins come into the picture and they go, hey, we can offer you, just hold your coins there. Don't do anything. Here's the thank you. Here's a thank you. Here's a thank you. Remember when I told you a lot of staking protocols, they literally pay you daily. So imagine having a bank account and getting paid once a year for the money that you have inside of it. Now imagine having a stable coin or staking a staking coin and getting paid daily instead. Which one would you rather have? It says, but stablecoin advocates argue the campaign is less about protecting financial stability and more about protecting a $187 billion annual profit engine that banks derive from payment processing fees. Banks don't care about us. Rich people don't care about us. I know some of you are really sad. Don't be sad. I've mentioned that many times. I've even lost subscribers when I mentioned things like that before. There's this really weird idea that rich people want to snuggle us. They want to, no, I will protect you. Let me hold you close. These people don't care about us. They use our money to make more money for them. They want us to use their platforms to make more money for them. You know, the craziest part, the money that they make from us, from having bank accounts, they use to buy homes. They use your money to buy homes. They put you into these homes as a permanent renter. The rent that you get, the money that you get from working all day as rent, you hand to them, and they use that to buy more homes and more land and more assets. That's how the system works. The idea of draining deposits, that's your bank account deposits, moving to other places. How do you get to $1 million Bitcoin? You get to $1 million Bitcoin by people moving their money out of the old system and going, this is garbage. You destabilize lending. What do you think that means? Their lending power that they use to lend your money out. That's how the system works. $187 billion in annual profit. If you get a chance, watch a video on exactly how much $1 billion is. It is going to terrify you. We're so used to hear billion. When you realize how much $1 billion US or billion of anything, watch a video on YouTube. There's so many of them. They'll show you with charts and graphs, and some even use grains of rice, or they'll use $1 bill in a football stadium. $1 billion is a tremendous amount of anything. $187 billion from the money that you have that they want to keep. The fight now unfolding in the corridors of Congress amongst lobbyists on both sides of the issue underscores the stakes as stablecoins transition from niche crypto instruments to mainstream popular rails. At the center of the controversy is whether issuers who hold dollar deposits backing the stablecoin should be allowed to earn interest, or whether such activity should remain the exclusive domain of traditional banks. It says banking lobby pressures Congress to ban stablecoin yield programs. It's just about money, because you want to know what the other side of the coin is. Everyone trying to get this banned, everyone trying to make sure that stablecoins don't produce a return, are going to be creating their own stablecoins, which will get a return. You think JP Morgan coin is just some random coin floating around? No. It's always about the same exact thing. It's just like an excessive amount of greed. That's why it's important to remember that you're early in the cryptocurrency space. It's important to remember the opportunity that you have, really laying out in front of you. The idea of what it is going to mean to make passive income from holding on to crypto in the future. Yeah, I saw this and I was like, of course. course, of course, of course. It's kind of like, I don't know, I've last thought. I don't know if you've noticed. I've started seeing a lot more banks as well offering like instant transactions, instant payments, send this money instantly. You can send this money, like, because the idea for crypto has always been, not only is crypto open 24/7, you can send money whenever you want through your own wallet. But also, like, in theory, it's like instantaneous. It might take 8 seconds, 12 seconds. It'll still get there. It gets to the person who you're actually sending it to. Banks could have done this years ago, but they realized that crypto started catching on and they were like, well, we got to do the exact same thing. So yeah, they're only doing this because they realize that people are moving. I mean, all these companies who are moving into stablecoins, they transfer instantly. You don't have to wait. You don't have to wait the weekend. You don't have to wait till, next day business hours. You can do it at 2:00 in the morning. It gets to your friend at 2:01. Instead of looking to fix the system, they only upgrade when they need to because everyone else realizes how rigged everything actually is. Well, that's going to do it for this video. Yeah, weird times. I think next year's going to be crazy. Like really, 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 like really. Between yields and stable coins, I think we're going to have a bit of a doozy on our hands. I do hope that you've all enjoyed. I do hope you all are having a great day. Morning, afternoon, evening, wherever you are, wherever you might be. I do hope it is absolutely fantastic. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.